The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's program brought to you by...
So she didn't inherit Grandpa's jawline, but there's no doubt she's family. It's your job to raise her, and it can be tough. Let's make it easier. With technology and automation, you can do more, like produce high-quality bales with way less effort. Built-in sensors can measure bale moisture and size, so you can monitor quality on the go and manage your fleet from your phone. Sit back and enjoy effortless operation. Discover an easier way to work.
Well, as we wrapped up the week on Friday, the grain markets took a hit. Outside markets took a hit as well. Livestock did for a period of time, but cattle did try to work their way back into the green into the close. But a lot of this tied to ongoing tensions between the U.S. and China and posts from President Trump on Truth Social. We're going to dive in and talk about all of this and take a look at the markets as a whole for this past week. Joining us here on Market Talk, powered by John Deere Operations Center, Ted Seifert with Zaner Ag Hedge. Ted, welcome back to the show, my friend, and good to talk with you. What an interesting finish to the week of the market trade, Ted.
Yeah, Jesse, who needs an October WASDE report when we have Truth Social posts and all sorts of trade stuff going on? And yeah, I mean, I guess when the week started, we were kind of wondering how that would go without any USDA, export sales reports, crop progress reports, no October WASDE, which is one of the biggest reports of the year. Yet we still had some things to talk about, still had some things to trade, still had some pretty big moves in the markets, really kind of culminating on Friday. So yeah, kind of a wild week, and we're living in some wild times, Jesse, that's for sure.
Absolutely. Well, let's start with the key piece, I would say, and that, of course, is the news with Trump and China. And he said no need to meet with President Xi now in 2 weeks. And amid China's letters that they're sending out to folks about rare earth minerals and more. And that's what it all seems to kind of stem from here. And I'm pulling up the social post on our video feed. But I mean, talk about this news. Obviously sent a lot of shockwaves through Friday's markets. Soybeans, the downside leader of the grains, but the outside markets weren't immune either. I mean, talk about this, Ted, your perspective here, how this affected things to close out the week.
First of all, I mean, not to nitpick here, but, he said 2 weeks, but it really would be 3 weeks from today, right? I mean, October 31st and November 1st, it's exactly 21 days from now. So, whatever that is. But yes, I mean, that is a very lashing out post that you've got up on screen there right now, Jesse. I'm basically saying, we're not even going to try to have a trade deal with China at this point. That's my takeaway from it. Not going to meet, tariffs, probably big tariffs coming back on. Forget about the 90-day trade pause. I mean, he did stop short of saying that, but that's definitely the feel, or that's, I think, what he's alluding to when he's talking about, bigger tariffs going back onto China. And this was a reactionary post, right? China actually did kind of ramp up the tensions sort of throughout the week here. Now, part of it's in response to the pending port tax that we have going in place on Tuesday, the 14th. And I think I kind of got lost in the mix. I think the last time we talked, Jesse, we talked exactly about this, saying, hey, there's this deadline that this is going to happen, and really nobody's said much about it. Only a few analysts I've heard talking about it, but really nothing been said by, the White House or government officials as far as, is this still happening? Is it not? Well, it's still happening. And, China responded with putting on port taxes themselves. Now, they're very cumbersome, insurmountable, maybe. I mean, look, the lowest rate of port tariff that China has is 15%. Now, what's a little bit unclear to me is it's for U.S. flagged, U.S. built, or companies that are operated out of the U.S. or by U.S. individuals. Wow. I don't know. To me, that leaves a big gray area, right? We don't flag a lot of vessels. We don't really build as many vessels as we used to in the past. I do wonder what percentage of U.S. cargo ship or what percentage of cargo ships going into China are U.S. flagged or U.S. built. I don't think it's very much, but that owned and operated part. I don't know if they're going to look at that as, country of origin, where the cargo itself is coming from, or if it's, I mean, very, very few cargo ships are owned and operated out of the U.S. Is it the company whose cargo is on the ship, or is it the company of the ship itself? If it's the ship itself, I mean, most ships are flagged out of the Bahamas or Greece, Mediterranean, not U.S. So it might not actually have a really big impact. But that was just another escalation on top of the really big one that you mentioned. It's the rare earths thing. Basically, China is putting controls on rare earths. So anything that uses Chinese rare earths greater than 0.1%, they are now going to have the ability to say yes or no to whether they're going to allow that product to be exported out of China. And that is a really big deal because, we can say, hey, well, let's build the infrastructure to do this here in the United States. But in order to build that infrastructure, we need robots. And guess what? Those robots, the chips that run them, come from rare earth that we would have to get from China. So they could pretty much block us from building our own infrastructure to get these rare earth minerals. Also means all of our military, really everything, phones, but I mean, a lot of the things that we use, that we rely on, are sort of dependent on this. And now that this means that China gets to pick and choose what they allow and what they don't. Obviously, that has a big impact on us. That obviously has really made Trump angry because he recognizes how big of a problem that could be. So, those two things together sort of prompted that Truth Social text or tweet or whatever we're calling post. Yeah. And look, all the hope that we had even just a week ago of, hey, Trump and Xi are meeting. Trump has said explicitly that he's going to talk about soybeans. And, we were really hoping that would mean a big announcement of a big sale to China. And by big, at this point, Jesse, it'd probably have to be over 10 or more million metric tons just to get us started and get us somewhat not even caught up to where we should be for this time of year with China. But there was a lot of optimism in the market. And I'm not going to say this completely dashes all optimism, but it really, really takes a big hit at this point. Yeah. The reason why I say doesn't dash all optimism is because we hear things like this where things really aggressively escalate in a short period of time, and then they get walked back again. I think that's the main reason why soybeans weren't down 40 cents on Friday. I think the news by itself, if the market completely believed it, should have resulted in more pressure and beans being well under $10, November beans being well under $10 by the end of the day on Friday. But like I said, that's just sort of been the way that it's worked throughout Trump's first administration, and this one is where things get really, really bad, but then a few days later, there might be something that looks better. If there isn't something that happens between now and that what was supposed to be meeting at the Apex Summit in South Korea, that's when I think all hope is lost. So, yeah, I think the markets reacted accordingly, but did leave the door open for things to maybe soften into next week. We'll have to see. The fact of the matter, Jesse, as you know, as I'm sure every analyst that comes on and talks to you says, the door is very quickly closing for our window of opportunity for our soybean export program to China. Yep. And if we don't get that going right now, there is a large amount of that export number on the soybean balance sheet that the USDA is currently using, or what, as of their September report, who knows when we'll see an update on that. There's hundreds of millions of bushels that could come off that export number and more than offset any drop in yield that might be happening as harvest rolls along.
Yeah. Well, and thinking about the soy aspect of this, and I know I've talked with so many folks about this, and we know the situation there. I do want to spin a little positive for us, though, here, Ted. The corn market Friday really didn't fall out of bed. And it's a different situation in the corn side of the ledger, but to at least try and look at something positive on Friday's market trade, corn only down a couple of cents. I was happy to see that, I guess, is how I would put it, Ted.
Yeah, I think that's part of where the soybean relative strength is. Well, part of the reason why the soybeans were heavier is corn kind of held up well. But the fact of the matter, Jesse, is that corn, at least in recent years, it doesn't have a whole lot to do with China, right? We're not selling China corn. I don't know. Maybe a month or two ago, we might have been somewhat optimistic that, hey, if we get a trade deal done with China, that they would buy some U.S. corn as well. But I think that notion has gone by the wayside quite a while ago. So corn not nearly as affected by that. And you got to say, yes, corn has held up very well. I mean, not just on Friday, but kind of throughout the week, the last 2 weeks even. I think certainly part of that is the conversation of yield. And with the lack of the October WASDE report, with the lack of the USDA coming in to give that October update, it kind of allows for the yield debate to really rage. And it's Schrodinger's cat. If you're not aware, I mean, I'm not going to go into it too far, but look, basically, Erwin Schrödinger had a quantum physics theory that if you have a cat in a box with a radioactive isotope that could potentially decay or not decay and kill the cat. So in that box, there's two worlds that exist. One where the cat is alive, one where the cat is dead. Until you open the box, both those worlds exist. And right now, to bring it all together, Jesse, I think you have the same thing with corn yield. You have the idea that the dry finish that we had and the terrible disease problems that we had are really going to cut the yield down 10 bushel an acre or more from where the USDA left it. And then you have the other ideas that maybe the USDA is not too far off on their 186 and change. With the market not knowing, generally speaking, Jesse, markets don't like uncertainty. Uncertainty is usually a negative influence on markets. However, when you're talking about uncertainty on production, that I think could be a bit of a positive influence on the corn market right now. And in particular, I talk about the large speculators, the funds. Now, the thing about corn, though, is if we start breaking some key technical areas, those large speculators will throw the USDA out the window and say, look, the market's telling us we don't need the USDA numbers. This is a chart breakdown. We're going to add to the short position. Or if the market doesn't break, they're going to get out of what's left of that short position, which last estimate, I think, was about 100,000 contracts. So they're going to let the chart tell us corn has been really rather resilient, even in the face of big losses in the soybeans the last couple of days. There is still some optimism there. I'm also going to say that 207 million bushels that we found on quarterly grain stocks, I think, has kind of gotten brushed under the rug a little bit, sort of out of sight, out of mind, until we see how that's reflected on a USDA balance sheet. Obviously, we know how that's reflected for old crop carryover because that's what it is and what that means for new crop beginning stocks. But what does it mean for new crop carryover? How does it interact with a new yield potentially? All of that just leaves, we don't know. So therefore, we're going to kind of brush it under the rug, it feels like. So, yeah, I think corn price action has done really relatively well in the climate, in the situation that we have. My concern there, Jesse, sorry to take a positive and potentially bring it to a negative, is that we really haven't gotten into the corn harvest in earnest, or at least not aggressive. We've really been focusing on soybeans.
Sure.
Soybeans, we got to get after them when they're ready. And especially with the moisture content that we have in soybeans right now, the focus has really been on soybeans. Big jump, I think, last week on soybean harvest. But as we get towards the end of the soybean harvest, or for the beans that need to get harvested right away, we'll start getting more after corn. And I think there's going to be a lot of hedge pressure on corn, or a lot of cash market pressure on corn. I think there's a lot of bushels that need to come to town because we really didn't have those summer weather rallies for the second year in a row. For guys that, the traditional marketing plan of you have your orders resting above the market, look for these summer weather spikes to get hit and get you sold or forward contracted. We just didn't really have that. And I think a lot of guys are very undersold for what they have. And I worry that it really seems like we're storing beans more than we normally would. So now we're even dealing with potentially less space to store that corn. I do think there's a lot of bushels that come to town. Now, I think that hedge pressure or that cash pressure could get offset if you have a bullish speculator or an uncertain speculator that's buying or getting out of a short position. That could go a long way to offset that farmer selling. But if we're doing it in a climate where the speculator's also selling, that's when things get a little bit more negative. So none of that's happened just yet, Jesse. The jury's still out. We're waiting to see what happens. But I do want to remind guys that that is a possibility and that the bulk of the corn sales, I think, are yet to hit the market.
Good perspective. Let's talk cattle quick before we wrap up here on the show today. I had to refresh my screen into the close. Cattle at first was caught up in the risk-off sentiment after Trump's post in the markets, but then, here we are. Cattle find their way back into the green, into the close, 5 straight days higher. Just doesn't seem like there's a lot of overhead resistance, especially in the feeder cattle complex right now, Ted. I mean, your thoughts on cattle this week?
Yeah, look, we like to say, old cliche from the pit, feeders are the leaders, right? And they are certainly leading the way higher, record highs pretty much every day. I mean, it's very impressive. And deferred month cattle, kind of the same thing. I mean, really, putting in new highs, a lot of strength back there. The December contracts kind of lagged behind. And I think that's because, we're sort of in a little bit of a time frame where we do have that seasonal slowdown in demand. But looking forward to the holiday season, the market feels like, at least for the moment, that demand's going to be really good and carry over to next year. With the border shut down with Mexico and the inability to bring in feeder cattle from Mexico, the tight supply situation looks like it's going to continue on well into next year. I really no end in sight to that, Jesse, and even maybe get worse because 2025, while we didn't really have the animals, we were able to feed to higher weights. But as we continue to starve the market of new feeders coming in from over the border, we may not be able to feed to those higher weights. So when you take the poundage out of the equation, that's less production. So, I mean, I think the outlook is for even less production going into 26, which is why the feeders are as strong as they are, which is why the deferred month cattle are as strong as they are. But I got to say, with the uncertainty that was thrown at all of the markets at the end of the week here this week, Jesse, with the stock market really, I think, now getting very concerned about the escalation in the trade talks with China. If that continues to go from bad to worse, you worry about the overall economy and what that might mean for that holiday spending that we just talked about that was expected to be so good. That could start to change. We could start to say, oh no, like just in time for the holidays, people are going to be reining their spending in and maybe not spending as much at the butcher's counter in lieu of, still trying to, buy nice gifts for their family and friends and things like that. So yeah, I think it was a rather impressive close, very impressive week for the cattle complex as a whole. I do think you have to keep an eye out on that stock market and what consumer spending might be going forward. I think there's a little hint of doubt that kind of crept in at the end of the week. But I mean, you got to say, it was a really positive week for the cattle complex and a really impressive day on Friday, considering everything else that was going on.
Ted, anything final you would mention or reiterate to folks here as we wrap up the show this week?
We didn't really touch on hogs. And one thing I am going to say is that and again, I don't have any technical reason for it, and I certainly didn't see any signs of it on Friday, but if there were to be a bigger break in cattle, and it were specifically based on economic concerns, you do wonder if the hogs could regain some of that mojo and head back up towards those highs as that cheaper substitute. So that's the one. I mean, we're looking for bright sides here, Jesse, right? So I wanted to throw that out there. And then the other thing that I'm going to say is look at the crude oil market. A lot of times commodity traders as a whole look at the crude oil as sort of the canary in the coal mine for commodities overall, aside from gold that trades for different reasons. But physical commodities, a lot of times they look at crude, and that was a pretty solid downside breakout there on Friday. So there's a lot of warning flags popping up, Jesse. Just need to pay attention to all that.
Ted, if folks want to reach out and talk with you there at Zaner Ag Hedge, how can they get in touch with you?
Yeah, you can reach me directly at 312-277-0113. That's my direct line. Aside from that, you can find us on the web at www.zaner.com. You can read a bit about us. We have some new additions to Zaner. I'd encourage you to check that out. We're very excited about it. You can also sign up for my afternoon commentary, our new market analysts weekly newsletter. Actually, multiple reports coming out every week from Karen Braun. And then you can find me on the X platform. I'm at the TED Spread.
Always enjoy the conversation and the perspective. Ted Seifert, Zaner Ag Hedge. Thanks for joining us on Market Talk, powered by John Deere. Ted, have a great one. We'll talk to you again soon.
Thanks, Jesse. You have a great one too, and always a pleasure, man. Thanks for having me on.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.